I saw your latest note, and I think it's an important one to address. Can you establish a major bottom before we've seen the big EPS forecast cuts?
The truth of the matter, John, and I keep getting that. I keep getting that question from clients, and it's not only that you can get the market bottom while earnings estimates are coming down, but if you go back and you look at major periods of stress, like the tech bubble, like 2018, like the 2015, 2016 industrial recession, that is often the case. That the stock market puts in a bottom several months before you actually flip back into positive revision territory. So I'm not sitting here telling you that reducing earnings estimates further isn't going to be a headwind for the market. I think that it is. But in my mind, it's something that causes us to merely retest the June lows, maybe take another swing low at them. But I think we probably did put the low for this cycle in place in June.
Lori, where is sentiment this morning?
So someone asked me this question last week, and I said, 85% of the people I talked to are still bearish, about 15% are bullish. It did feel like, maybe over the last couple weeks, that bullish cohort grew from about 5 to 15%. But if you look at the CFTC data and just want to get the quantitative read, I think that sentiment in NASDAQ has become euphoric again. Futures positioning is getting close to the highs that we've seen in recent years. But if you look at something like small cap, the Dow futures, or even S&P futures, we are still very much in the early days of recovering off of an extreme low. In the case of small cap and the Dow, off of new lows that were below a great financial crisis lows. So I think it's a bit of a mix. I think there are some pockets of euphoria, but I do think overall positioning has still been pretty depressed, and sentiment reflects that.
Lori, what's going to drive small caps higher at a time when you see consumer sentiment falling off a cliff and consumer spending, while still resilient, showing signs of weakening pretty much across the board?
So I think the issue with small caps is that they have very clearly baked in a recession at this point in time. We've gone through a bunch of the numbers. What we have seen essentially is that if you look at small caps against jobless claims, they're already baking in a pretty big spike from here, even with the recent move that we've seen up in small cap recently. Small caps are also baking in a trough-like move, a plunge really in ISM manufacturing that hasn't happened yet. It's probably coming. It's baked into the small cap stocks. But I think the other issue that we see is that historically, longer-term investors know that recessions are usually good buying opportunities for small cap. They sniff out the pain early on. They sniff out the recovery early on. And at the end of the day, small cap is really, I think, the one part of the market that has clearly baked in an economic downturn.
Lori, over my break, I was thinking a lot about the talk about reshoring or onshoring a lot of manufacturing from China, from Asia, in response to some of the supply chain disruptions. Is this more talk than action? Are you actually seeing this on the ground with small caps?
So I don't think we're seeing it in a massive way yet, but I will tell you, Lisa, in my recent travels with investors, that issue is something that small cap portfolio managers are highly engaged on and highly focused on, particularly when it comes to the industrial sector. And there is a view out there from professional money managers who specialize in this space that will ultimately be a good thing for the small cap industrial stocks. It may ultimately be challenging for margins for the bigger cap companies, but there is a view that this is something that's going to be a tailwind for the small cap space and hasn't really played out yet.
Lori, I've got you at 4,200 year end on the S&P 500. I've got the market on Friday at the close at 4,228. What now? What do you tell clients?
So, look, I think that the argument that valuations are too high right now, I think that's kind of a thin argument for saying we got to peak out right now. I do think it's a concerning data point. It reins in my enthusiasm through the end of the year. We're close to 20 times my numbers for next year and this year. But I do think that, these are year-end targets, John. We're trying to guess where the market is going to be on December 31st, not the high it's going to achieve this year. So I do think that we're setting up for further volatility in the very short term, especially if we get favorable messages at the end of the week from Powell. I could see this thing going just a little bit longer, just based on how low and extreme the positioning has been. But I do think if we're being intellectually honest, we have to set up for some choppiness and volatility through the end of the year.